Hey, this is Alan Brochstein from 420 Investor and New Cannabis Ventures, and I'm here to talk about some of the most important news of this past week. As a reminder, we've been publishing a newsletter at New Cannabis Ventures for 6 years now, and what I'm trying to do in these videos is give a little bit of context to what we viewed as the most important news of the week. I also like to start off these videos with a little bit of a discussion about what happened with the price action. This was a much better week. If you recall last week, there was like no news. The only news that we published, I said this was the first time it ever happened, was our own content. There was literally no news that was worth publishing last week. This week was a little bit different. We had some news. We also had better price action. And while the global cannabis stock index did fall slightly, it experienced a nice reversal during the week, left it down just 0.2%. And I think underneath it all, the big story last week was the rebound in the MSOs that they fell early in the week and ended up up for the week. So this part of the market's been under a lot of pressure. And the catalyst for that was a rumor only, that the safe banking bill, which you may recall was passed by the House of Representatives last April, but has never received a vote or discussion even in the Senate. It's supposedly going to be attached to a defense spending bill. So we could see this development play out. This is something I talked about at length with my subscribers at 420 Investor in terms of what it means for the market. But that was really the big news of the week. Now, we published 7 stories. 3 of them were exclusive, 4 of them were curated press releases. Again, our curated press releases revolve around 3 different themes, basically: quarterly financials, M&A, and capital raising. There was no capital raising this week. There was M&A, 3 of those stories, 2 or 3. Yeah, I'm blanking out on the number. I may be wrong about the number of stories. We'll see in just a minute. So the M&A that we saw, there were 2 deals that closed. This is the fuel for the future growth. Air closed their New Jersey acquisition of Garden State on the original terms. And we also saw Jushi close its Massachusetts acquisition on terms that were revised lower. So for both of these companies, this was meaningful news. A third piece of M&A news was out of Glass House. Glass House, California-based, relatively new public company. They have cultivation in Santa Barbara where they're headquartered, but before they even went public, they were talking about this pending acquisition to acquire a massive facility in Southern California, and they closed that. It was also on reduced terms, less cash required. So this was a big overhang on that stock, whether or not that deal was going to close. And that stock was up a lot during the week, consequently. So those were 3 of the stories. As I mentioned, there was no capital raising, but we did see, or at least that was important, but we did see 2 financial reports. They were both from Canadian retailers. This is a part of the market that I think investors don't pay enough attention to. The Canadian retailers have much better fundamentals and better valuations than LPs in general, especially the larger ones. This is something we've talked about at New Cannabis Ventures for a long time. It continues to be the case. And so 2 of them reported financials this week: Fire and Flower and High Tide. Fire and Flower had a slight revenue miss, but was stronger than expected on the adjusted EBITDA. And it was the exact opposite for High Tide: slightly better than expected revenue, and the adjusted EBITDA was a little bit worse than expected. I think the theme here was that there are some short-term problems in the Canadian market due to competition. Too many stores in certain parts of Ontario is certainly part of the story. And then also there's an increasing number of retailers that are pursuing a value strategy. So both companies talked about this and what they're doing about it, but on their conference calls, I listened to both. But if you're not paying attention to these types of companies, I think you're missing out an interesting part of the market. And then in terms of, so that's 5 stories, and I guess we had 8, not 7. The other 3 were proprietary content, and our proprietary content tends to be focused on just a few areas. First and foremost, every week we publish 2 interviews, and these are with American and non-American companies, public and private. And we did publish 2 this week, which I'll talk about in a moment. The other types of proprietary content that we're sharing at New Cannabis Ventures tend to be 2 types. One, it's about our proprietary resources. Our proprietary resources include the 7 indexes that we run, as well as our revenue tracker. These are things that we do for the benefit of our readers that are unique and proprietary, and we'll write about those at least once a month. And so and there was none of that this week. The other type of proprietary content that we write, besides those interviews and what I just mentioned, I'll break down the data from certain markets. This week it was Michigan. So let's talk about that one first. The Michigan market, which isn't very penetrated by MSOs, there are 3 that come to mind that have significant exposure there: Cresco, Red, White, and Bloom, and Engage, which is being acquired by Terracin. But Michigan continues to show very strong growth, although it's a slightly slower pace. I think it was up 125%. I don't remember the exact number, but triple-digit growth, a little bit slower than last month compared to a year ago. And it did fall a little bit sequentially. I think we have to be careful trying to read too much into these fluctuations. There's certain seasonal factors, and I don't read too much into that. But that was really the news there. And if you look underneath the hood, what's really interesting in Michigan is that we've been seeing flower prices that were super high a year ago come down. They fell 41% again this month compared to a year ago. And this month was August, by the way. They get their data out pretty quickly. And this is the second month in a row that we've seen actual price increases in that market. It was 4% in July and 8% this month. And what's going on is that we've seen the prices came down as more supply came on, and that seems to be stabilizing now. So this is another really interesting market. I know people focus on California because it's such a huge state. Michigan is a top 10 state in the country in terms of population, but it's very much an analog to what's going on in California. You have a very strong legacy market there that was dismantled overnight. They had medical cannabis there for years. So there's a very rich cannabis legacy there, but new regulations that had to be dealt with. So the medical market is in decline right now while the adult use market is growing very rapidly. We're seeing stores open up. We're seeing more production come online. And finally, the prices, while they're still a little bit high, they're not as crazy high as they were a year ago when there just really wasn't enough supply. So hopefully that bodes well for the growth of that program. And then, like I said, we did 2 interviews this week. That's Articles 7 and 8. And one was a private company and one was a public company. Let's go with the public one first. That was Verano. And this is the second time that we've interviewed them this year. First time was right after they began trading. We interviewed George Arches in March. And on this follow-up, I think it was a pretty good interview. And honestly, I haven't been that impressed. He plays his cards very close to the vest. And even in this interview, he'll say these things. And as an investor, you're like, who cares? We really value our employees. Okay, great. Everybody does. But in terms of real meat, I think one of the things that stood out for me was that they have almost all, if not all of their assets are unencumbered. So they should be able to do sale leasebacks if necessary. And we did probe George about kind of the potential for capital raising through equity issuance. And that sounds like it's not happening. So I thought that was pretty good news at the margin, that they have the ability to access capital through the debt markets and sale leaseback. The other thing that was interesting, we asked them a question that I thought was pretty top of mind for me, which is, what do you think isn't well understood about your company? They're a newly public company, and I think he had a great answer. It was very interesting, worth listening to, or certainly reading the article. But in a nutshell, he said that because they're a new stock, people get confused and think they're a new company. But in fact, they've been in operation, I think he said, since 2014 in Illinois. And so that company's had a lot of moving parts. Obviously, right before they went public, they merged. It was a big merger with AltMed out of Arizona and Florida. And so anyway, I thought that was the best interview we've had with George Archos. I'll leave it at that. And then I'm always fascinated by these private companies that seem to be excelling. And we interviewed the CEO of C3 Industries, and I thought that was fabulous. And the story on that company is that you have these two brothers and their friend are running this company. Basically, they all grew up in New York together. The friend is the person who was running the Green Solutions. I can't remember if it was their grow or their marketing, but played a prominent role in the success of the Green Solutions, which was in Colorado, was acquired by Columbia Care. And so you have basically these very savvy money guys, and then their friend who's cannabis savvy. So that's a good start. And so this company dove into one of the toughest markets on the planet, basically, Oregon. That's where they began to their operations, and then they went to Michigan, another tough market. So they disclosed their revenue. I'm not going to say it right now. You can listen to the interview. They talked about the capital raising. That was one of the most fascinating parts of the interview, to see who their investors are. So I like those kind of interviews, and kind of my big takeaway is, I always say this is not a winner-take-all industry. The way these states are structured, many of them, it really limits the ability to get massive share. There have been certainly some examples of companies that have gotten massive share in a market, like Trulieve in Florida, for example. But for the most part, because of caps on production or the number of stores, or a market that just has so many licenses it's impossible, like Oregon, it's really hard to be a dominant player in the country, much less in any market. And so I think there's going to be a lot of winners in this industry going ahead. It's not going to be like Coke and Pepsi and no other providers of sodas. And so this company, we asked them about going public and things like that, and of course he gave the politically correct answer, in the future if we can list on a higher exchange. But if you think about growth opportunities for the current MSOs, these guys, I told you their footprints in Oregon and Michigan, and I told you earlier there aren't that many public companies in Michigan, and they have projects coming online that have begun to come online in both Missouri and Massachusetts. Well, Massachusetts, a lot of the major MSOs have exposure already, but you can imagine, kind of like Columbia Care and their acquisition of Greenleaf, this is a nice potential acquisition candidate, in my view, for a larger MSO looking for exposure in some different states. But anyway, so that's pretty much it for this week. Let's keep our fingers crossed. This has been just an absolutely brutal 7 months as far as I'm concerned. I've been watching this market for 8 years plus now, I guess 8.5 years. And this has been one of the most disappointing periods of time, because the fundamental, and we know the prices got ahead of themselves, but at this point, the fundamentals seem to be and that gets me into the final point I want to make. Sorry, I forgot to talk about, each week I share kind of an idea or a perspective, and getting to the point I was just making, that this brutal 7 months. Well, one of the biggest victims has been the largest ancillary companies. And these are, I'm talking specifically about Scotts Miracle-Gro, GrowGen, and Hydrofarm. All three of these companies have just been massacred. They're all down double-digit year to date. And so for the feature article for this newsletter, I took a look at where they were valued at the beginning of the year and where they're valued now on three different metrics. And I mean, the valuations have plunged. And so it kind of begs the question. I'm not going to give you the answer because I don't necessarily have the answer, but it begs the question, is there a fundamental disconnect going on and that these things are just a real bargain? Or are these stocks telling us to be careful about our assumptions? And let me just explain what I mean by that. During earnings season, all the companies, all the MSOs were talking about their big expansion plans, and this makes sense. They're expanding in the states they're operating in, like Illinois and Pennsylvania, but also all these new states coming online. So then 3 weeks ago, I talked about how they don't even have to issue equity to pay for all this expansion. Debt markets have opened up. Sale leasebacks are doing well. There's new companies providing sale leaseback that are now publicly trading, like New Lake. So we know that all these states are coming online. We know that the MSOs have the money to build it out. We know what they're saying. So why are GrowGen, Hydrofarm, and Scotts falling so fast? This week, GrowGen took out the $30 level, which is where they did that big equity offering, $172.5 million last December. Hydrofarm last month made a new all-time low. It's still trading above its IPO price. And this week, Scotts Miracle-Gro made a 52-week low. So it's a question. I'm not going to give you the answer. I don't know it for sure. But the question is should we as investors be jumping on these stocks because they're a bargain, or is this a warning sign, to be careful about the growth that we're assuming for the MSOs? I'll leave it at that. Have a great week, everybody. Take care.